Hello, this is John Martinka, and I am known as the escape artist for the work I do helping people escape their job situation, have their own business, escape their business when the time is right, and helping them exit with style, grace, and more money, and also helping those owners who want to grow escape their plateau by acquiring another company, growth by acquisition. And my guest right now is Bill Barclay. I've known Bill for many years. He is a senior vice president and regional manager for commercial banking in the Puget Sound area with Columbia Bank, one of the best regional banks here in the Northwest. So welcome, Bill.
Oh, thank you, John. Good to be here.
So my first question for you is, what are you seeing with your existing business owner clients? What's going on in this COVID world?
Yeah. Well, I think it's somewhat vertical dependent. A lot of companies are doing just fine, and but then there are companies in certain verticals like hospitality, transportation that are not doing very well at all. So yeah, I think it really depends. And a lot of the banks, ours included, I think are in very good condition. And despite increasing our loan loss provisions a little bit, not substantially. And so I think bank health factors into the whole market for M&A activity. Okay. And the fact that the banks are in pretty good condition this time around, I think is a factor in deal activity.
Okay. So of your, as you see your and your team's clients and the ones who have been hurt, whether it's a little or a lot, what do you think, I know it's just a guess, but rebuild versus it's time to get out. I've been through this before, even if I have to sell at a price lower than I hoped for a year ago.
Right. Well, a lot of business owners were rebuilding their business from the last downturn, and I think a lot of them, it was somewhat age dependent, as it always is, but they were, if they hadn't gotten out, and a lot of people were in the process of doing a transaction, I think if their business has not been that impacted by COVID, that those deals will still happen and continue to go through. If not, if they're just starting the process or were partially through the process, I think those deals are on hold for now.
Yeah. Okay.
Yeah.
Yeah, I've been saying that I think there's a lot of owners who've been through this, whether it was the .com or 9/11 or the Great Recession, and they're just to the point they're going to say, the pain of rebuilding is greater than the pain of selling at less than I wanted. They're going to want to sell.
Yeah.
And I think there's going to be, I personally think there's going to be opportunity for other companies to grow by acquisition because of that. What do you think?
I agree. And I think it's becoming, I shouldn't say more popular, but, acquisitions are not easy. And there's certainly a long trail of acquisitions that haven't worked out. But I think people are getting better at it in general. I think the banks certainly are better at underwriting them. And, we'll probably get into this a little later, but, I think our underwriting has gotten a little more conservative with COVID. But I don't think that's necessarily a bad thing in terms of the business's health going forward. To not add on, over leverage a company is not necessarily bad.
It's really good to not over leverage the company. We read
Yes.
about those over leveraged deals in the Wall Street Journal all the time with private equity. So,
Yep.
What kind of financial information are you interested in right now? And does it differ from what you might have been looking at a year ago, and why?
It doesn't really differ, but I would say that we are getting into the weeds a lot more than we ever have. We really want to see what is driving the cash flows and the stability of those drivers. And it's not just COVID. The issues with China certainly impact a lot of businesses in the Northwest. So we want to look at those as well. I wouldn't say that the information itself has changed very much, but we are digging into things more than we ever have.
So does that mean you're looking more at the non-financial factors of the business, the customers, the employees, the vendors, management structure, et cetera?
I would say so. I would say that's even more important than the financial aspects these days. And we want to make sure that there's a moat around the business. Again, the stability of cash flows. We a lot of times we'll look at what happened to the business during the last downturn, especially if the business has cash flows coming from multiple sources. We want to look at every source and see how that fared the last go around. So I would say that's really important.
Okay, all right. So the deals that you've seen, and I know it's only been 4 or 5 months since COVID has hit. Have you seen a change in deal structures or valuations, that type of thing?
We have, yes. I think valuations have come down. I wouldn't say substantially, but they've definitely come down. I would say our underwriting has changed, gotten more conservative. I think there's more of a focus now on secondary sources of repayments, i.e. collateral.
Yeah.
Whereas in the past, we would consider an airball deal or a deal without collateral if that got back into sync probably 1.5 to 2 years out. Now, pretty tough to get a deal that doesn't have full collateral coverage done. We do them on occasion, but the cash flows have to be bulletproof, and we have to have a really high level of comfort that's going to be sustainable going forward.
And that would be for a conventional loan, since an SBA loan doesn't require full collateral.
Right. That's correct. And on SBA loans, we just got a signed term sheet for a nice $2 million one. And we really looked at what happened in the last downturn. And it's a company in the auto industry. And their service business did not drop at all in the last downturn. We haven't seen it drop much in this go around, and that gave us a level of comfort that allowed us to go forward with it. Even and it's an SBA deal, and to be honest, the only difference on an SBA deal for us is collateral.
Yeah.
We still want it to be a going concern. We still want to have comfort in the fact that those cash flows are going to continue.
Yeah, well, you should. And I guess they're a cash flow lender, so that their guarantees collateral to you.
Right.
Yeah. Okay. Are you seeing or requiring more seller financing in buy-sell deals?
We are not requiring it, but we're seeing it just because, as you know, there's bank debt, there's equity, and then there's seller debt. And I'm seeing more of it for sure. Yeah, I think that's filling in the gap or the reduction in bank debt.
Okay. So are you requiring more buyer contribution to a deal, even with the SBA?
Not necessarily.
Okay.
We certainly want to still see some skin in the game, but I don't think that's really changed all that much. No, I wouldn't say that's the case.
Okay. So what I'm hearing, I think, is if it's a good business, things really haven't changed.
That's right.
Yeah.
And I think we're fortunate. We went through the last downturn really well as a bank, and actually picked up a fair amount of market share because we were still open for business. We still are open for business. And so that gives, we're not being reactionary, I guess.
Okay. So on any kind of lending, especially buy sell deals, has all the money the government's been quote unquote giving out affecting how you do things? PPP, et cetera.
Not really. It is certainly, PPP has certainly helped the balance sheets of some firms. Um, we want to make sure that they're going to get full forgiveness.
Mm-hmm.
But again, I think the value in most of the businesses that we underwrite is in the reoccurring cash flow.
Yeah.
And less the balance sheet aspects of the deal. So
Now there's word on the street that if there's a PPP loan on the balance sheet and there's a buy sell deal and it hasn't been forgiven or turned into a term loan, that it could disrupt the deal because the lending bank has to consent to it. Is that true?
I've not run into that yet, but I can imagine that it would be true that we would have to consent to that. And that certainly wouldn't stop a deal, but we would want to know who the buyer is and all the other aspects of the transaction, how much equity they're bringing to the table,
Okay.
all of those things. Yeah, for sure. I mean,
So
it's cheap capital, I mean,
yeah. Oh yeah. And
yeah,
it's helped a lot of businesses
yeah,
make it through.
yeah, for sure.
So final question, unless you have anything else to add, you just want to get out there. What's your loan volume, the requests for loans? Is it up, down, about the same?
During PPP, in April, I would say loan volume went down to virtually nothing.
Yeah.
We were so preoccupied with that. And now it's slowly rebuilding. We're going to have a really strong July. We've got a really good pipeline for August. I don't know if this second phase, if you will, of infections are going to impact anything. So far, we have not seen that. I think, the Northwest, at least Washington and Oregon, are in relatively good shape. So we're pretty optimistic that things are picking up. Now, it's been a kind of a slow motion recession. We had this huge dip in March and April, and then it bounced back, and then now it seems like things are happening that are not good, and so we're cautious about that and concerned.
Now, is that your opinion, Bill, or is that from your economists on staff?
Yeah, we don't have an economist. We're a good sized bank, but we aren't spending out the money for a full-time economist. But no, that's my opinion, as well as just discussions with other folks in our senior management.
Yeah. And I guess it's good for banks if they weren't heavily loaded in the hospitality or travel or trade show business. That can really help.
Yes. Yeah. Well, we're fortunate that Columbia's always been a commercial bank first and foremost, and really focused on banking businesses, and we feel like we're really good at it, and so we've got a certain stability to the bank just because of that focus and not being so reliant on commercial real estate like a lot of banks are.
Yeah. Well, thank you, Bill. Again, this is Bill Barclay, the Senior Vice President, Regional Manager of Commercial Banking for Columbia Bank here in Seattle. And I appreciate your taking the time for this.
My pleasure, John. Thank you very much.
All right. Okay. Have a good day, Bill.
All right. You too.
All right.